Hey, hi everyone. Welcome to another video. So we're going to discuss about PIMCO today and also about Bill Gross and how PIMCO became a top bond market company and why Bill Gross is called the bond king and what led, for his departure from the company as CEO and also the major company details and milestones and performance and challenges that the company has faced. So that's the topic for today. And so PIMCO stands for Pacific Investment Management Company, and Bill Gross is called the Bond King, and he's a fixed income. Uh, he trades in bonds, the fixed income bonds, and he's called Bill the Bond King. Okay, so Bill Gross is basically studied in Duke University psychology, and while he was studying at Duke University, he faced an accident, and he was hospitalized for a lot of months during that accident. And during that time, he studied this book called "Beat the Market," written by Ed Thorpe. And once he became good or recovered from that particular incident, then he went to casinos also in Las Vegas and was able to make a lot of money using his probabilities and betting when the stakes are on his side. Also read the book Beat the Market and Beat the Dealer, and he was very inspired by those books. So after that, he has done his MBA from UCLA Anderson School of Management, and he's called the Bond King. Um, so PIMCO is a part of Pacific Life Insurance. So Pacific Life Insurance was already an existing company, and it was founded in 1971. And it was founded by Jim Muzzy and Bill Portlich, and it's headquartered in Newport Beach, California. And what this Pacific Life Insurance has given, they were impressed with basically Bill Gross and his um, risk management techniques, his probability techniques, the way he sees risk and reward, and you understand, right? He's successful in casino, and he was able to make money in a casino. So he's very good at managing risk and reward and having a very good view on probability, right? So what he did is he was able to rally the company Pacific Life Insurance stakeholders to form a separate unit within Pacific Life Insurance, and it was named as PIMCO, right? And PIMCO has actually become a bond giant, right? So it has pioneered active bond management. So it is the first company which has pioneered the active bond management during an era when fixed income was seen as passive. So at that time, fixed income was just seen as passive. You just invest and leave it, and you just get money. But he has pioneered active bond management. So bonds also need to be actively managed because interest rates hurt the bond yields. Okay, and financial policies, the fiscal policies also hurt the bond returns. And when there is uncertainty and crisis also in the market, then bond returns are hurt, and that's the reason active bond management is needed. You can't just keep it as a passive. If you keep it passive, then during these inflation as well as interest rates, if they become high, and when there is uncertain market, you will not get good returns. So he has pioneered this active bond management when in an era when fixed income was seen as passive. And during 1990s, he helped institutionalize this total return strategies. And this total return strategies managed the PIMCO Total Return Fund. This PIMCO Total Return Fund has grew into the largest bond fund in the world. Okay, and by 2008 and 9, he played a key role in the global financial crisis by buying agency MBS and treasuries, and he benefited 25% from that. Basically, PIMCO benefited 25% from the 2008 global financial crisis by buying treasuries and benefiting from this Fed policy. So assets managed by PIMCO at its peak were around $2 trillion in assets, and which Gross has managed. Why Gross has left PIMCO? Because he has an internal conflicts with some of the PIMCO executives, especially CEO Mohammed El Arian. and his behavior was known as temperamental, and his management style was eccentric. Behavior caused tension in the executives. And also post 2008, some funds underperformed the benchmarks, so he gross abruptly left PIMCO in September 2014 and joined Janus Capital. This has impacted PIMCO, and $60 billion in fund outflows have gone from PIMCO over a few months. So, so this is again the summary. Basically, PIMCO was founded in 1971 by Bill Gross, Jim Muggi, and Bill Podlich. Current owner is Allianz, German financial services giant, headquarters in Newport, California. Global offices are there in 20 places worldwide. Assets is under management is 2.2 trillion. Fixed income, macroeconomic forecasting, and active bond strategies. These are the things they use. The total return fund was launched in '87, and it's acquired by Allianz and in 2000, and it capitalized on the financial crisis via government bond strategies. And these are the major milestones, right? 2013, the conflict between Alarian and Gross has been made public. And Gross left, and Dan Ivasian became the group CIO. Okay. Then it expanded into ESG and alternative credit strategies. So challenges faced by PIMCO: Gross, when he departed, this caused investor panic and significant outflows of funds happened in 2014. Reputation also was hit. Media scrutiny and lawsuits, including Gross suing PIMCO over his exit. Shift to passive investing. So passive investing has gained ground with Vanguard's passive um, funds, as well as BlackRock's ETFs gaining a lot of buy-in from major institutional buyers, and the shift has happened to passive investing, and PIMCO has to compete with this passive investing to still make the stakeholders believe in the active bond management. Rising interest rates so led to temporary declines in long duration bond fund NAVs. Key lessons are: active bond management works when macro forecasting is strong. Leadership transitions in investment firms must be managed carefully. Culture matters. Personality clashes at the top can disrupt even the best performing firms. And diversification into credit alternatives is necessary in a low yield world. Okay. So he has pioneered this entire modern bond portfolio management, and he's called the Bond King. Okay, Bill Gross. Okay, and this is a recap again, basically. So the strategy he uses is active fixed income and macro forecasting and rate bets. So this is the main strategy that is used, and active bond management. Okay, it's the largest bond fund, and massive profits were there even in 2008-9 crisis through U.S. government bonds. So that's right now. PIMCO is owned by Alliance from 2000, and it focuses on bonds, alternatives, ESG, and real assets. Still, the strategy is macro forecasting and duration and rate strategies. Okay, so that's the video on PIMCO and Bill Gross and active bond management and macro forecasting. Okay, so that's it for today, guys. Thanks everyone for joining the call. Have a nice day. Bye.